Hello again, everyone. It's Vince Ford from TradingWinds.com, and this is our update for September 11th, 2022. Wow, September 11th. I cannot get that date out of my mind. I remember it like yesterday. Just an awful day. But let's have a quick look at how things finished off on Friday. Much more positive day for the markets on Friday. The Dow Jones was up 500 points, quite the rally after a decent bounce both Wednesday and Thursday. So the second half of the week last week was a very positive one. Now, in the grand scheme of things, did it really mean much? Well, it's a healthy bounce, no question. But unless and until we can get above the 20 and take out a high, there's really not a lot to get overly excited about. So right now, this looks to be just another retracement back to that downsloping 20 and potentially another short setup here coming up. If we look at the S&P 500, up 80 points. Again, very strong day across the board here. Same exact pattern, though, on the daily chart. You look at the NASDAQ, up 350 points. And again, the exact same pattern. So very, very consistent throughout. We're going to go through the charts of the different sector ETFs, and you're going to see a lot of the same there as well. The Russell 2000 here, up over 37 points. Again, a very healthy bounce second half of last week. And now we're faced with a retest of that downsloping 20. In this coming week, we do get some inflation data, which I think is going to be very, very important and have a lot to do with the way the market reacts this week. If we look at crude oil, very nice bounce on Friday, up almost 4% on Friday. Although all we managed to do was come right back to this level here where the lows are, 87. So, we still have downward momentum here. We still have lower highs, lower lows. Downtrend fully intact on the daily time frame. So we'll look for a reject of that 87 level and potentially a move down to 75 here on oil. Gold up 8.5, again, just approaching that downsloping 20. Silver is right there, right at it, up almost 2% on Friday. Had a real strong week last week, but again, is back to overhead resistance here, testing that downsloping 20. And in all likelihood, we should expect another short setup here very soon. If we look at the dollar index, yes, we pulled back on Friday, but we did close well off the lows. We seem to bounce off that 20 again. And, earlier in the week, we were up above 110. So the dollar is still looking very, very strong. If we broaden the scope a little, go to the different ETFs for the different sectors, you can see energy. We have a buy signal looking pretty good. We had a number of those oil companies setting up Wednesday, Thursday, and Friday. And here we are on XLRE, the ETF for the energy sector, setting up long here as we start another week. So look for a break above Friday's high as the trigger. If we get that, we should, at a minimum, be coming back to 85, this prior high. If not, all the way back up to 93 here. So that's one of the positive ones. There's 3 or 4 that look pretty positive. The rest still look weak. XLF did close back above the 20 here, but we have negative momentum. We still have lower highs, lower lows in place. I wouldn't get overly excited about it. Look for a rejection there. Look for another short setup potentially. XLK technology still has a long way to go just to get back to that downsloping 20. So yes, a solid second half of the week last week, but really nothing else to get excited about. Consumer staples, exact same look. And again, for the majority of these, you're going to see this look pretty much the same as the 4 index charts. There are exceptions. Utilities still near the highs, still looking, a lot more bullish than bearish here. We'll see if we can take out this prior high near 78 and continue to run up. Healthcare breaking above the 20-period moving average. Now, again, we do have a buy signal there, but are we going to buy? Well, I'm not. And why is that? Well, negative momentum. So we cannot say we have a trend to the upside. So to me, this is a very, very aggressive buy signal. It's going against the flow. And so I will pass on it and hope that it quickly fails, rolls back over, we close back below the 20, get a short setup, and then we jump on board and look for a move initially to 124, and from there, potentially down to 118 here on XLV. XLY, consumer discretionaries, again, closing just above the 20, but we have negative momentum. We have lower highs, lower lows. Still a pretty bearish looking chart. Real estate, getting closer to that 20, not quite there. XLI, the industrials, again, a little further away. Lower highs, lower lows still intact. Materials, we're right at the 20, but lower highs, lower lows still intact. Communication, lower lows, lower highs still intact. And retail, exact same thing. So overall, not a whole lot has changed. There is a glimmer of hope here, but this coming week, let's take a look at the economic data points. We do have some key inflation data coming up. Monday, pretty quiet, not much to go on. There's consumer inflation expectations, but no one really watches this number, so I wouldn't put a whole lot of weight into that one. On Tuesday, here's the biggie. We get the core CPI number for August. So, the previous was 0.3. The forecast is 0.3. What are we going to get? Here, 5.9, 6.1. What's the actual going to be this time? Is it going to be higher? That's what we got to take a look at. Remember, the reason why this is key is Jerome Powell and team at the Fed are looking for a slowdown in the inflation numbers, right? If they get that, then they may start scaling back their pace of rate hikes. Until they see that, they will continue to be very aggressive at hiking rates. So the higher the inflation number comes in, the worse it is, because it means the Fed will continue to be aggressive raising rates. So we'll take a close look at that. But these are the ones with 3 stars. That's what you want to follow. And we get that on Tuesday. On Wednesday, we get the MBA mortgage apps number as usual. We also, again, get core PPI here. So that's an important one. We get PPI month over month. We get crude oil inventories. Those are the biggies on Wednesday. Thursday, we get the jobless claim number, which is always a key one to look at. We get core retail sales, another important one. We get the Fed manufacturing index. We get retail sales. So a lot of big ones coming up on Thursday. We get business inventories, retail inventories, ex-auto. So a lot here. And on Friday, we get the consumer sentiment number, which is also going to be something to keep an eye on. But overall, again, when you look at the index charts, we're testing key levels above, but we're still in a situation where we have lower highs, lower lows. So a downtrend is intact here. Just using one of these for the S&P and looking at the weekly time frame, again, we just recently got rejected here, put in a new lower high pivot, the major pivot, right? Big day on Friday, big reversal, closing back above the 20, looks pretty strong, right? If there's follow through, then we could potentially end up with a reverse head and shoulders here on the weekly, right? And it will look pretty good. But the key is to take out this high. Really, until we can take out this high here from the week of August 15th and say that we have a higher high at that point, nothing else really matters. So that if you ask me the one thing to keep an eye on to decide whether or not this market has finally bottomed, at least for the near term bottom, right? This is the level you want to watch on all 4 index charts. On the S&P, it is the August 15th weekly. It is that most recent major pivot high. That is what you want to watch. In this case, comes in around 4,300. If we can take that out, then we're looking for more upside. As long as we remain below that level, look for more downside, okay? Now, tomorrow, Monday, September 12th. We will be having another live market chat, but we have to change the time. Remember, we're doing it earlier tomorrow, 10 a.m. Eastern time. Normally we do it at 1 p.m. Eastern on Mondays. We're going live at 10 a.m. Eastern. That's because of my scheduling conflict. I have to attend a memorial mass in the afternoon, unfortunately. So I apologize for the inconvenience, but I really hope you can join us tomorrow morning, 10 a.m. Eastern. It's going to be an important week for the markets. Tomorrow may be a little quiet, but once we get those inflation numbers, Tuesday, Wednesday, things could heat up pretty quickly. So again, I hope to see you at tomorrow's chat, but until then, enjoy the rest of your weekend, and we will see you on our next update.